Hi friends, welcome back again. Yet another company is going to get added in the IPO list of 2021 and it is the 40th IPO this year. The company is Ami Organics. Let's talk about those 5 things that you should know before you apply for Ami Organics IPO. First thing, Ami Organics is a chemical sector stock. Specifically, it's a specialty chemical sector stock. More specifically, the company is in pharma intermediates and agrochemical business. Much more specifically, more than 85% of their revenue comes just from pharma intermediates. Thus, pharma intermediates is the only thing you should know to learn about company's business. For that, you have to know what is an API, active pharmaceutical ingredient. API is the active ingredient present in a medicine. For example, for relieving pain, you take painkiller, right? And the API that is present in the painkiller does the work of reducing pain in your body. And the pharma intermediates are the building blocks of these APIs. Or you can say pharma intermediates is used in the process of making an API. In simplest form, pharma intermediates is used for making an API and an API is used for making a medicine. That's it. Second thing to know about this company is that the company does both research and development as well as manufacturing of these pharma intermediates. Since its beginning in 2004 till date, the company has developed and commercialized over 450 pharma intermediates for APIs across 17 key therapeutic areas. Now what this therapeutic area means? It's simply the grouping of similar diseases or conditions under a generalized heading. For example, diabetes, cardiovascular, inflammation, etc. Thus, the pharma intermediates this company manufactures find application in high growth therapeutic areas like anti-inflammatory, antipsychotic, anti-cancer, antidepressant, anti-Parkinson, and so on. The company is the largest producer of pharma intermediates for APIs, namely trazodone, dolutegravir, entacapone, pazopanib, and rivaroxaban, holding more than 70% market share globally. Third point, let's take a look at the pharma intermediates market in India and its future growth prospects. India's chemical industry is valued at $166 billion and that's just 4% of global chemical industry as of 2019 and is expected to double by 2025, growing at 12% CAGR. Out of this $166 billion, about 47% or $78 billion market is of specialty chemicals and which is expected to grow at 11 to 12% CAGR. And the company's main business, pharma intermediates market in India is around $5 billion and will grow at more than 10% CAGR. The company has a worldwide presence, supplying pharma intermediates to domestic pharmaceutical companies as well as multinational pharma companies of Europe, China, Japan, UK, Israel and US. And in financial year 21, more than 50% of company's total revenue came just from exports. A good news for the company is that after the COVID-19 breakout, global players are opting for China plus one offshore strategy, which means they are diversifying and shifting their business from China into other countries, likely India. as it has cost-efficient market, cheap labor and strong technological capability. Currently, China meets 15 to 17% of world's specialty chemical needs and India only 1 to 2%. Thus, the shift from China to India is going to boost India's specialty chemical industry, and it is expected that specialty chemical will be next great export pillar for India. The company is also diversifying its portfolio by moving into agrochemical and fine chemical business, as it has recently acquired the business of Gujarat Organics Limited. And agrochemical has 41% market share of India's total specialty chemical market. Thus, Ami Organics has a huge market both domestic and globally and has a scope to grow its business exponentially in the future. Now we'll analyze company's financials, comparing it with its peers, and it will be the fourth thing to know. Company's top line or revenue from operations was 238.5 crore in 2019 and increased to 340 crore in 2021, growing at 19.5% CAGR. EBITDA, that is earnings before income tax, depreciation and amortization, went from 42 crores to 80 crores, growing at an excellent 38% CAGR. Operating profit margin or OPM has also increased from 17% to 23.5%. On the bottom line, there is profit after tax on net profit went from 23.3 crores in 2019 to 54 crores in 2021, which also grew at 38% CAGR. Earnings per share, that is EPS, increased from 7 rupees 40 paise per share to 17 rupees 14 paise per share in 2 years, producing a phenomenal growth of 52% CAGR. For financial year 21, ROCE is 25% and ROE is also good at 32%. Free cash flow from operating activities has also seen a steep increase from 14.8 crores in 18-19 to 27 crores in 2021. Continuous growth in free cash flow from operations is very good for growth of a company. Thus the financials are really good, showing that the company is a profit-making company. And if it grows at this pace, it will definitely become a leader in its sector. The company have more than 150 customers globally in 25 countries, but more than 44% of company's revenue comes just from its top 5 customers. And it's the biggest risk for the company. If any one of these 5 customers leaves the company, it will affect the company's revenue heavily. Now take a look at this chart of peer comparison with the listed companies of same sector. You can see that NAV per share, that is net asset value per share, is low as compared to its peers. But the PE ratio for this company is around 35, which is way below the industry average of 48.91, and return on net worth is about double to that of its listed peers. And the last thing you should know is the details of this IPO. The company is going to raise a total of 770 crores, of which 200 crores is through fresh issue, that is newly added shares, and the rest 570 crores is through offer for sale, that is existing shareholders are selling a part of their shares. The company has reduced fresh issue size from 300 crores to 200 crores as it has already raised 100 crore in a pre-IPO placement. The funds from this fresh issue and pre-IPO placement will be utilized to repay debt, meet working capital requirements and general corporate purposes. In this list, you can see 20 shareholders are selling up to 60,59,600 equity shares in its offer for sale, and the price band is Rs 603 to 610 per equity share. Lot size is set at 24 shares and in multiples. Retail investors like you and me can bid a minimum of 1 lot or a minimum investment of 14,640 rupees and a maximum of 13 lots or a maximum of rupees 1,90,320 rupees. You can start to apply from 1st September 2021 until 3rd September. You can know about your allotment status on 8th September and the company will get listed in stock exchange on 14th September. Hope you learned a lot about this company and sector. Comment down below. Are you going to apply for this IPO? That's for today. I'm Devati Viswas and you are watching FinTech Funda, and our aim is to make you financially free through technical and fundamental knowledge. Hit the like button if you really like this video and let YouTube know that we are adding a little value to your life. Subscribe our channel for achieving financial freedom. Thank you.